Good morning, Professor Masseglia. Thank you for participating in this mock session of the Jean Monnet Network on EU-China relations, and specifically about your work on the application of European value-added tax in a cross-border context. First of all, we would like to ask you, which are the taxes applicable to importation from China to the European Union?
Thank you very much. Levies on goods imported to the EU are generally value-added tax, or VAT, or better, import VAT in this case, customs duties, and excise duties. Import VAT is an indirect tax, a tax on consumption, and in the context of the extra EU cross-border trade, so the trade, in the context of the trade between the EU and third countries as China, we call it import VAT, and consistently with the neutrality principle, which is the ground of any VAT system, which covers a wide range of aspects. Import VAT, according to this neutrality principle, is levied at the borders on goods from third countries because those goods are subject to the same tax conditions that apply to comparable domestic goods. So imported goods are taxed at the same conditions as domestic supplies, in order to do not have differences between imports and domestic goods. And it must be noted that the VAT rate is the one applicable in the country where the goods are being delivered. And this is a particular case of the European Union. Indeed, the rate can differ from one member state to another, since the EU regulations establish only number of applicable rates and their level, leaving room of maneuver in this regards to member states. As regards customs duties, they are levied on all goods with a value higher than 150 euros. This relief does not apply to perfumes, toilets, waters, tobacco products, and alcoholic products, and they are paid only at the borders of the EU. So they are not charged on national goods, but only on goods originating from third countries. And they are levied for budgetary purpose and commercial or economic reason. And contrarily to VAT, they have the same rate throughout the whole European Union. As regards excise duties, they are also indirect taxes, but on the sale or use of specific goods as tobacco products, alcohol, and energy products. And in this case as well, the EU legislation sets out only minimum level of excise duties, above which individual member states are free to set their own rates.
Thank you very much for your answer. And can you tell us about recent EU developments concerning taxes or imports?
These are, for example, the abolition of the exemption for low-value consignments, but also the creation of new regimes applicable to goods coming from non-EU countries. As regards the first one, we can say that since the 80s, VAT exemption has applied on imports below a certain value, which was 22 euros, because the cost of collecting VAT on these imports will exceed the expected revenue. But with the development of e-commerce, imports have multiplied, and this has resulted in not only an increasing loss of VAT revenue for the member states, due to mislabeling or undervaluing higher value goods to take advantage of such VAT exemption, but also a competitive disadvantage for EU suppliers who did not benefit from the exemption and have to charge VAT on their supplies of low-value goods to EU customers. So, with the package of 2017, this exemption has therefore been removed in order to avoid these distortions, and this applies from 2021. And from this date, from the 1st July to 2021, so import VAT is payable on all goods entering the EU, irrespective of their value. Another important modification that has been introduced is that to simplify declaration and payment of VAT with the same package, the so-called e-commerce VAT package, it has been new schemes have been introduced for the importation of low-value consignments in case of business-to-consumers distance sales. And these are the Import One-Stop Shop, or IOSS, and other special arrangements which apply when the IOSS is not used. And this is also in place from 2021.
Finally, can you tell us more about the Import One-Stop Shop?
The IOSS scheme and special arrangements apply to goods to be imported with an intrinsic value not exceeding 150 euro. These thresholds follows the thresholds of the customs duty exemption for as well consignment of negligible value. And in the case of the choice of the IOSS is an option. So businesses can opt for this scheme. It's not mandatory for this consignment. It's still an option. And in order to use the IOSS, the supplier or platforms as well, which are facilitating the transactions, need to register to the IOSS through an electronic portal of one EU member state called the Member State of Identification. And upon registration, the tax authorities of this member state of identification issue an IOSS VAT identification number to the supplier or the platform or their intermediaries. So there is the possibility to register in just one member state and declare the transaction, all the transactions supplied everywhere in the EU. The IOSS VAT identification number must be then indicated on all packages sent to the EU customers under the scheme in question to show to customs authorities that VAT has been properly paid. Indeed, in the case the IOSS is used, the VAT is paid as part of the purchase price by the customer and is collected by the supplier or the platform facilitating the transactions, and not at the moment of importation. So the payment is anticipated. So that scheme, the total price of the transaction is known by the customer at the moment of purchase. And at the moment of importation, so at the moment when the goods are crossing the EU borders, if the intrinsic value of the consignment does not exceed the threshold that I mentioned before of 150 euro and the IOSS number is valid, for free circulation in the EU territory is exempted from VAT to avoid double taxation, which is because VAT has been already levied. VAT has been already been levied before, and if the supplier or the platform does not use the IOSS, the VAT is paid upon importation into the EU. And VAT is charged and collected at the rate applicable to the goods concerned in the EU member state where the supply takes place, which is the member state of consumption. And is then up to the tax authorities of the member states of identification to transmit the relevant information, collect and reallocate the VAT to the corresponding member states of consumption.